Hello guys, welcome back to my YouTube channel. Today I'm talking about split limits, what they are, how they work. What is split limit? A split limit is an insurance policy provision that states different maximum dollar amounts insurer will pay for different components of a claim. These policies, also referred to as split liability policies, are commonly part of the automobile insurance industry and generally come with the three types of claims: bodily injury per person, bodily injury per accident, and property damage per accident. Key takeaways: a split limit is an insurance policy provision that states different maximum dollar amounts the insurer will pay for different components of a claim. The policy generally comes with three types of claims: bodily injury per person, bodily injury per accident, and property damage per accident. Split limit policy tends to have lower premiums because they offer narrower insurance coverage. If coverage under a split limit policy isn't enough, insured parties may consider combined single limit or umbrella liability policies. Understanding split limits. Most vehicle insurance companies have policies that cover different types of claims using split limit approach. This means there are three different dollar amounts that cover each accident or incident involving your vehicle. As mentioned above, these categories are: bodily injury per person, the maximum an insurance will pay to a single person for a medical bodily injury in an accident. Bodily injury per accident, the maximum amount a company will pay to all parties injured in a single accident. Damage property per accident, the amount an insurance company pays to cover all damaged properties in one accident. The liability limits set by insurance companies are generally expressed in numbers. For example, a split limit policy may impose limits like 100, 300, 50. This means the policy pays $1,000 per person, $100,000 per person per accident for a bodily injury with a maximum of $300,000 per accident. The limit for property damage per incident, meanwhile, would be $50,000 under this policy. But what happens if one person seeks $250,000 in damage for their injury? The maximum the split policy will pay is $100,000, even if only one person is injured in the accident. The only way the split limit policy will pay $3,000 maximum is if three different people each have $100,000 in claim. Important: split limit policy set liability in number to represent limit per claim. For example, a split limit policy may impose limits like 100 per 300 per 50. Split limit policies tends to be more cost-effective option for insured parties since they offer narrower insurance coverage. Split limit policy tend to command lower premiums. Split limit versus combined single limit policies. To get broader coverage, insured parties can pay more for a combined single limit. A combined single limit policy is opposite of a split limit, limiting the coverage for all components of a claim to $1 amount. For example, the split combined single limit policy may state that it will pay out $300,000 for a single claim. In that case, it doesn't matter whether the one person claims $300,000 in medical expenses or whether three injured parties each claim $100,000 in medical bills. The combined single limit maxes out at $300,000 either way. Having a single limit policy can eliminate the need for an umbrella policy, but since the coverage is more expensive, it's wise to compare cost of the two. Carefully consider what assets would be exposed if you are sued. Retirement accounts are generally exempt, and in some states, your home can't be sold off to pay a judgment. This is an important component of financial and estate planning. that's often worth getting professional evaluation. That's it for today, guys. In next video, we will talk about split limit policy versus umbrella liability policies. Thanks for watching. Take care.